Yeah. So first of all, thank you very much to our friends from the media for joining today. It is a momentous opportunity for us to announce the launch of Crowdo, not only because of our business expansion, because this is a proud moment for Malaysia as well. Malaysia is one of the first markets to legislate equity crowdfunding and is a true pioneer in the field of alternative financing, including equity crowdfunding. We've been here for the last 2 or 3 years, and we believe that there's massive potential for the Malaysian market, right? You not only have 650,000 SMEs, you have various government agencies like MDEC, MAGIC, who are supporting growth in entrepreneurship and also innovation. And on the investor side, you do have sizable community of investors who are open to alternative investments. And our job here is to play a pivotal role in connecting these two communities to make sure that startup investment becomes efficient, transparent, and also easy for everyone to participate in. Right? We have great plans for Malaysia. We believe that this is not going to be one of the markets. It will be a flagship market for us. Malaysia is very integral to the overall corporate strategy. That's why my co-founder and myself are here today. And I think it speaks to the potential of the market here. Right? Now, we believe not only in remote control of market development, we're building up a local team of dedicated and talented Malaysians, right? And we build up teams across the region, and I believe that you should be proud of the talent which is here. Not only the talent of the team which is being added to our Crowdo local team, but also the talent of the entrepreneurs that we're running into every day. Ms. Petrina Go from wedding.com.my being one of them, right? So I'm absolutely delighted for you to be attending. Thank you very much. We have many big news coming out in the future, but we'll take it one step at a time, and we'd like to thank you again for coming today.
Can I have the first question from the floor?
Hi, Pushpa from Starbiz here. Can I just ask you, what are the criteria that you have set for startups? Any special income or, that they need to fulfill in order for them to, get the capital raised?
Yeah. So this is a very good question, right? So we specifically target high growth companies in consumer facing industries. And the reason for this is because two reasons. One is because these are usually the sectors which embrace equity crowdfunding quickly in other markets that we look at. And secondly, because these are the businesses which are so important to economic growth here in Malaysia as well. You have tech companies which are fostering innovation, but you also have real economy businesses like consumer goods, retail, F&B, which is really employing a lot of people here in Malaysia itself, right? So these are the businesses that we're targeting, high growth companies in consumer facing industries. Now, it's a very efficient and also standardized way for people to raise money, but we do go through due diligence to make sure that when investors look at an offer online, right, they are reassured that Crowdo has done its job to pre-qualify offers. So we do 3 types of due diligence. One is called statutory due diligence, and we make sure that the issuers or the startups or SMEs have gone through the regulatory requirements that the SC has imposed on us. And this could be audited financial statements, it could be other corporate documentation as well. The second thing we do is what's called business due diligence, right? We want to make sure that the businesses which are listing on our platform are of a certain stage. So when we talk about high growth companies, these are people who are a bit beyond idea stage, right? So they have a business in place, right? It's running, it's turning some revenue. Maybe it's not profitable yet, right? But they have a solid business in place, right? So we will do business due diligence. We'll do interviews with directors to make sure that they're fit and proper. And the third thing is, I think this is specific to equity crowdfunding, but we'll also look at what we call social due diligence as well, to make sure that they have a sizable online community, because the new power which is granted to issuers through equity crowdfunding is really using the power of the web, social media, to actually spread word about their fundraising requirements, right? So we will look at their online presence, how active they are. With these 3 due diligence criteria passed, then for the first time, the issuer will be allowed to list on our platform to solicit investments from our investors, right? From there, what we say, it's for the crowd wisdom to kick in, right? It's for the crowd to use its wisdom collectively to decide whether the issuer is deserving of that investment or not, right? And how crowd wisdom kicks in, it's basically an all or nothing approach, which means that the issuer sets a target. It could be 3 million ringgit, it could be a bit less, But unless the offer reaches its target within, let's say, a 60-day period, the funds are not dispersed to the issuer, right? So unless the issuer is able to convince enough investors that they're worthy of investment, right, the funds will not be dispersed to them.
Hello, good afternoon.
Good afternoon.
Aslin from the Edge Weekly.
Yes.
Yes, I'm asking on behalf of the investors, what are the risks associated with ECF platforms like Crowdo?
Yes.
Thank you.
So the risks inherent with what we would say early stage financing is that these are high growth companies, but the flip side is that there is risk associated with high growth or high potential, right? So these are typically businesses which may or may not have profit, right? And the other thing is that they're typically investments or businesses which are illiquid as well, right? So you shouldn't think of it as trading on the Bursa, right? You should be thinking of yourself as an angel investor, as angel investors in Silicon Valley do it, making an investment, betting on the future of that business, right? If you think about angel investors who actually invested in like social media companies or social networking businesses, they were invested in when they were like small businesses operating out of dorm, right? Many businesses have succeeded, but many have failed as well. And that's the way we need to think about the asset class, right? What equity crowdfunding is doing, though, is trying to add transparency to that risk, right? So right now, if you're an angel investor, chances are you go to a coffee shop, right? It's offline. You're really relying on the entrepreneur's word to decide whether the information is fully disclosed, right, and true or not, right? What equity crowdfunding does, it brings all that information online, right, for everyone to see and everyone to scrutinize as well, right? So we're trying to bring in transparency to mitigate that risk, right? The other thing is about what happens when you part with your money as an investor, right? Because if you're an angel investor today, if you write a check, you'll never see it again because it would be translated into shares in that business. So we have things like a cooling off period, which means that for 6 business days after you made that investment into the escrow fund, you could actually withdraw it at 0 costs, right? And I think this is extremely important because if you're passionate, you're excited about a business and you put in money, chances are, after a few days, you need to be given the opportunity to decide whether you want to withdraw or not. The second is about crowd wisdom, how the offer needs to reach its target for the funds to be dispersed, right? And the third thing is, we try to do a lot to inform and educate the investors about the nature of the asset class. So if you go to our learning center, we have a section called Investors, and we have around 26 top queries that we face from investors asking about the risk, how startup financing works, and so on. And we will continue to add to that to make sure that investors make completely transparent, informed investment decisions.
Hello. Hi.
Yes, hi.
Hi, Sharina from Lemire. My question is, what is the minimum and what is the maximum investment?
Okay. So,
And another question is, what is the average size of the project?
right, okay. So, we like to say that anyone can become an angel investor from as low as 3,000 ringgit, right? I think that 3,000 ringgit is good because it allows you to use a portion of your wealth to allocate to venture financing, right? The other portion you should go into stocks, public markets, and so on. But it's enough money for you to participate in the next big thing, right? But at the same time, making sure that you're not overly exposed. The cap on the investment is determined by what type of investor you are. If you're a sophisticated investor and you do this for your livelihood, you're a venture capital fund, institutional investor, the amount of money you can invest is uncapped, right? For retail investors, per issuer, you're capped at 5,000 ringgit, right? And over a 12-month span, it's set at 50,000 ringgit. If you're an angel investor, the amount of money you can invest is 500,000 ringgit, right? These ceilings are set by the Securities Commission. I think that it's truly insightful to have these caps because it allows investors to participate in a new investment asset class within their own means, right? Now, the average I think is going to differ issuer by issuer, right? It's for the issuer to decide what the average ticket size will be or what the share price will be, right? But I think that the range we probably see as, varying differently depending on the type of investor you are. In terms of the money you can raise anywhere up to 3 million ringgit. In terms of the businesses that we actually target, I think that initially we'll start off with smaller ticket sizes. It might be a bit lower than 1 million ringgit. But eventually we know that for the Malaysian market, the sweet spot, it will be around 3 million ringgit.
What is the market potential for crowdfunding in this part of the world, like in Malaysia or Southeast Asia, and how much it is worth now, and how much do you think it will grow in the future?
Right. Okay.
Thanks.
So I need to rely on third-party stats, but I think that if we have a network of advisors and also people that we talk to, people from the World Bank, people who are doing crowdfunding in Southeast Asia. I did a talk at the ASEAN Business Advisory Council, for example, and I think that everyone knows that not only the need for equity crowdfunding, alternative financing is massive in Southeast Asia, but they also believe that equity crowdfunding is going to be key to unlocking that potential, right? If you look at some of the overall numbers, right, so I think that the World Bank says globally in the developing world outside of US, it's $96 billion. Within Asia Pacific, I think it's around $62 or $63 billion. And I think that if you still net out China, which is part of the 63 billion, a sizable portion comes from Southeast Asia, right? And if you think about it, it's natural and it's intuitive because SMEs play such an integral role of economic growth here, right? This is being further fueled by entrepreneurship, encouraged by each market. We've seen some really good startups coming out of Malaysia as well, right? But the access to venture financing is very tough here, right? If you're an entrepreneur, like a startup, you spend close to 9 to 12 months down the road, offline, door to door, spending 80% of your time probably on financing when you're distracted from building up your core business. And this is a huge issue. And whichever market we go to, especially Malaysia, the entrepreneurs and also business owners tell us that this is a huge issue, right? On the other hand, investors are also looking for new investment opportunities, right? There's always that missed investment opportunity where they forgot to, or they couldn't invest in some of the big, massive startups here in Malaysia, right? And I think that they see concrete value in coming to one platform to see all the star Malaysian startups which are raising money and getting access to these investment opportunities. So this is a very good question. I think that the exits will mimic how angel investment or our venture capital is done today, right? So typically the holding period for angel investments or venture capital is between 3 to 5 years, right? Because if you think about it, it's intuitive. It takes time for these high potential companies to grow enough so that when they IPO or when they make a trade sale, they reach sufficient value, right? So usually the holding period should be between 3 to 5 years. For some specific sectors like nanotech or biotech, it might be a bit longer, right? But I think the important thing that investors should come in with the mindset of is that these are not publicly traded shares that you sell on an everyday level. You're basically investing in the potential of a business which you hold on for a few years, right? And it's also an opportunity for you as an investor to participate and encourage the growth of the startup over that multi-year journey as well.
What about dilution? Because maybe once you raise certain money, then if the issuer issue another set of new shares, then you'll be diluted. Is there any way that?
Yeah. So as an angel investor myself, I'm absolutely thrilled when I'm diluted, right? Because that means that the overall valuation of the business is growing, and that means that there's serious institutional money coming in as well, right? I think that from an investor point of view, related to dilution, you just have to make sure that within your rights as a shareholder, you're able to participate in future rounds, like a first round of refusal, which means that when external financing comes future, you have that chance to actually buy into the company because you believe in it, right? And if dilution happens, right, if you're diluted by 10%, but the overall company valuation grows by 10 times, I'd be a happy person, right? And I think that that's the way that investors should look at it as well.
So does it mean that the ECF platform allows investors to have the right to take part in future?
Okay, so in terms of future fundraising and so on, this is clearly an agreement between the issuer and the investor, right? So when you come to our platform, each of the issuers need to publish their shareholding agreement, which basically outlines all the rights that you would have as a shareholder, right? It would talk about tag along, drag along, first right of refusal. These are a bit buzzwords, but basically giving you your rights as a shareholder, right, in future events of financing or exits, right? So this legal relationship will be established clearly between the issuer and investor, so that when the investor puts in money into the escrow account, if the offer is successful, they seamlessly transition into a shareholder relationship, which the underlying legal documentation is already in place.
Can we have one last question from the floor?
Hi. How many companies are already on your directory, and how much money has come in or trickled in so far?
Yeah. So I actually, thank you very much for asking this question. So Crowdo offers a very distinct approach compared to other operators, right? We think that great equity crowdfunding platform is going to be built off the back of a great, vibrant community, right? And that's why we have a community of about 700 businesses which are already registered on our platform, right? And these are, you know, profiles of companies of the who's who, as well as aspiring businesses here in Malaysia, right? Now, not all of these companies are raising funds, right? Because we want to raise visibility first before they are going to say that they want to raise financing, right? Now, today, equity crowdfunding, we've just launched today, right? So no money has actually trickled in yet, right? But judging from the amount of interest and demand that we're hearing from investors, I've actually had today some people come up to us very interested in our issuer, wedding.com.my, and I believe that, you know, there's going to be strong demand as we publish more and more businesses which have been vetted by us. Yeah, absolutely. So basically, equity crowdfunding is new here for Malaysia. In other markets, we do P2P lending, right, and also conventional crowdfunding as well, right? And you know, but equity crowdfunding will be the first time here in Malaysia. Because of our some of the confidentiality we have with our own shareholders, we don't disclose stats. But what we could usually share is that, look, we've done hundreds of financing, right? We've done hundreds of financing. You could actually identify all these hundreds through our various platforms, right? We've helped raise business from 6 different continents, whether it's the U.S., whether it's, you know, Europe, whether it's Africa, whether it's Asia, raise money, and we facilitate payments from over 70 different countries, right? So it is a relatively vibrant and robust platform that we have, right? We believe that there are a lot of things which are transferable, right? Because if you think about equity crowdfunding, what is common across whether it's equity crowdfunding, conventional crowdfunding, or debt crowdfunding is the use of marketing. It's the way we do due diligence, right? And we believe that as one of the thought leaders in equity crowdfunding as well, we'll be able to combine that to have a massive impact here in Malaysia.
Okay, one last question.
Hi, Azli from The Edge again. I have 2 questions. What differentiates successful crowdfunding platforms from unsuccessful ones? And second question is, what is Crowdo's ultimate crowdfunding checklist for a killer crowdfunding campaign? Thank you.
So I think that the difference between successful and unsuccessful equity crowdfunding operators is one, whether you're really tailoring and understanding and really committing to the local market, right? So I'll give you an example. We've seen in other markets, foreign players come time and time again. Going gets tough, they exit, right? So I think that, you know, the dedication that we're also bringing to Malaysia is at a different level, right? That's why we've been here for the last 3 years. Mr. Goh reminded me that we've been actually here for 3 years because we want to have a sustained and thriving ecosystem here, and the only way we're going to establish that is through commitment. So one's local market commitment. I wouldn't underestimate this, right? The second thing is really thinking that, understanding that equity crowdfunding is fintech, financial technology, right? If you approach it like a website, you will fail because there's a lot more financial expertise which need to go into it. If you treat it like a traditional financial product, you will fail because there are so much technology, social media, digital PR which needs to go into it, right? And it's really a cross-section of 2 industries, but it's a new way of doing business, which is fintech. And I think that those are the 2 distinguishing factors. One is the local market commitment, and the other is understanding fintech and the expertise, right? I think that the second thing in terms of the killer checklist, I think that the answer to that is we have that checklist, please come to us, right? And we will make sure that issuers in Malaysia, startups and SMEs, always have access to global best practice, right, through the experience that we've accumulated through helping a few hundred projects being financed to make sure that you are up to success, right? We can't guarantee success, right? At the end, it's up for the wisdom of the crowd to decide, but we'll make sure that you have the foundation for that.
I think we have one.
Oh, hi. Just to clarify, you said just now that you have 700 businesses. Is it in Malaysia?
Yes.
Okay, and one last question. Where is there any possibility for setting up a secondary platform where investors can trade their equity shares?
This is a very good question. I think that it's partly policy related. It has been announced before in various forums that the Securities Commission is looking at the option of secondary trading off of our own license, right? With a window period for every 6 months, right? Now to the details of that framework, I will leave it to the SC to answer, right? But the thing is that in terms of secondary trading, if you're an investor or shareholder in a startup today, secondary trading already happens. It's not as frequent as public markets, right? But basically there is a shareholder agreement in place with the startup which governs the rules around how you can exit and also trade shares. So it doesn't mean that an investor today is locked in perpetuity. It just means that you need to follow a different set of documents. And unfortunately, still at the moment offline, but use that offline environment to sell your shares. Right? Eventually, we believe that it's important to create liquidity for the market. Right? So as the Securities Commission clarifies the framework and rules governing secondary trading, we will also be introducing that into our product as well.
Leo, just one more question.
Yes.
What do you call, so the investment can all be done online, yeah, without having ever needing to do any paperwork, number one. Number two, and the movement of funds is all absolutely virtual.
Yes. So when you apply as an investor, you need to upload some documents, whether your passport or your NRIC, right? This is for verification purposes. But you could upload an image. We'll use that for verification purposes. But it's meant to be a seamless online end-to-end process, 4 steps to becoming an angel investor, right? Now, we have had experience in Asia where people just insist on writing checks, right? We know that from our experience, right? So we have an offline avenue if someone wants to invest the traditional way so that we can also accept checks as well, right? But the thing is that all this will go into an escrow account. We never hold on to the money, right? It's always an independent third party, in this case, TMF Group. TMF Malaysia will be acting as a bank trustee to make sure that there are a safe pair of hands protecting the investor monies, right? But the overall concept is online, seamless, 4 steps to anyone becoming an angel investor, right? And an independent, transparent flow of funds.
All right. I think that's about it. Thank you so much, Leo.
Thank you.
Thank you, ladies and gentlemen, friends of the media. There are refreshments outside, but if you all have any questions from Rantau, we are here to assist you. Leo can answer a few questions, but I think just channel it to us and we'll actually try and answer that as much as we can. All right, thank you. Refreshments are outside. Please help yourself. Thank you so much again for coming.
Thank you very much for coming today. Thank you.